So if you're planning a renovation or doing anything to increase the value of your property, have a look at what's sold recently at the price level that you want and go to that level.
Yeah.
That's the best way to predict what's going to happen or what your property's worth.
Welcome to 360 Money Matters, where financial planners Billy and Andrew talk all things financial planning. This podcast aims to increase your knowledge and confidence with all things money. Each week, they will cover topics such as investing, cash flow, budgeting, saving, passive income, debt management, and much more, so you can live a life on your terms without limits.
Hello and welcome back to another episode of the 360 Money Matters podcast. I am joined by Billy and Marcel here today. Billy, who do we have? Who's this handsome man that's joining us on the podcast today?
Andrew, he is the rose between the two thorns. So we are very, very fortunate to have Marcel Dibna here from Besser+Co. He's a real estate agent located in Melbourne. They've got two offices located in Balaclava and South Yarra. Marcel has been, or is a director with Besser+Co, has been in the real estate industry for 15 years. We're very, very fortunate to have him. He's been featured in Smart Company Magazine, businessinsider.com.au, propertyobserver.com.au, Sydney Morning Herald, The Age, Australian Property Investor Magazine. The list goes on. I'm reading it here. I can't even follow it. Marcel, over to you. Introduce yourself. Tell us all about who you are, how you got into the industry. We're so great to and fortunate to have you here. Thanks for joining us.
Guys, thank you so much for having me. I've been watching your videos and they're great. I've joined the industry 15 years ago from having probably the worst experience that you can have when looking for a rental property. So I was moving out with a girlfriend at the time, and the agent was terrible. The experience was horrible. And I was looking at it going, this is the standard.
Has to be a better.
There's got to be a better way. And that kind of triggered me to get into the industry. I'd always had a passion for real estate. And from there, I did my agent's rep course and got into the industry as a young guy, not knowing what I was doing and where I was going. And I just knew there was a better way. And so I wanted to make a difference.
Great story.
Yeah.
Yeah, absolutely amazing. And so did you get first into property management and sales? What, did it go straight into sales?
Well, I wanted to do sales. That was where I wanted to go. I just couldn't get a job in sales. I went for a few interviews and they said, yeah, no problem. Start on Monday. Mission only, no pay, no salary, and good luck.
Yeah.
And I went, thank you for your time and I'll see you later. And then I found a company who had a maternity role, job available in property management. I was like, cool, I'll take it. And I haven't looked back since.
Yeah.
So I was there for 5 years. And then Dion, who started Besser+Co 15 years ago, I've known him since we were 15 years old, kind of reached out to me after a few years that I've been working with the other agency and said, hey, come on board, see what you've been doing. And I followed what he was doing for those 5 years and was impressed by what he was doing. He was doing things a little bit differently. And I was like, this is the place that I want to go to. So I jumped on board with Dion.
Yeah, fantastic. Well, maybe just on that note, if you could give us maybe a bit of a profile of Besser+Co, size of the business, the areas of Melbourne, the types of property, some of the stuff that you're doing. If you could just give us a snapshot of that.
Yeah, so we've got about 20 people in the business now. We've got about 1,300 properties under management, all through Bayside, Stonington, kind of City of Glen Ira. They're our main ones. And we also have some properties kind of out in Box Hill, Ringwood, kind of the outer suburbs as well, but predominantly focused on those inner Melbourne suburbs.
I'm going to ask the question that absolutely everyone probably asks you every time you're at a barbecue or at an event.
Yeah.
What's happening in the property market?
It's funny you say that because Uber drivers love that question. As soon as I tell them, I have the best conversation with Uber drivers about the property market. And it's great to hear what they think is happening as well. Look, the market's funny at the moment, right? We've had interest rates go up. We've got a lot of pressures on landlords. They're not seeing, in some instances, the growth that they've expected over the last few years. A lot of landlords are getting out of the market. They're selling because just too many pressures on them, which I'm sure you probably having these same conversations with your clients. And we're seeing a crazy rental market. We're seeing a huge undersupply of stock. We're seeing a lot of renters struggling to get into the market, and that's forcing the prices up.
Yeah. I mean, look, the conversations that we're having with people as well too, you're talking about the debt levels, serviceability is harder, cash flow, making the yield work out as well too, negatively geared, what it looked like, I guess, a year and a half ago versus what it looks like today. It's absolutely crazy, and it seems like it's, I don't know, I don't necessarily think it's getting any easier, just in terms of where we're at in the economic cycle. We're seeing the RBA is going to have to make a decision around what they do with interest rates. Inflation data came out. It's not as positive as what everybody was expecting. I think that came out yesterday at time of recording, so that will be probably a couple of weeks by the time we broadcast this one. But it's just a crazy market, and it seems to be almost, depending on sort of where you're at when you purchase property, what does that look like, is almost shaping your decision whether or not you continue to be an investor, continue to be if you're in a position to continue to rent. I think it just depends on your position and sort of what that looks like. But the variation that we're seeing right across the board is absolutely massive.
Yeah. Look, I don't think it's all doom and gloom. I think, I don't think it's the worst time to invest in property. I think over the last 10 years, we've seen a lot of growth, a lot of development. We've seen little growth in apartment stock, lots of growth in houses. I think if you purchased something 10 years ago, you're probably not too happy with the return that you've had. Interest rates, COVID, everything else that's happened. But there are opportunities out there if you are, again, depending on what cycle, what part of your investment cycle you're in, there is opportunity for good yield now, because I think that there's a huge undersupply of rental stuff. We're seeing it in the newspapers. We're seeing it in the media. Everywhere you look, you're seeing huge lines for rental properties. Now, what that's actually causing is rental prices to go up. They're increasing. So developers are kind of pulling out of the market because they're not stacking up these developments. There's not enough government housing to house everyone. Immigration numbers are going up. Yeah. There was 170,000 new arrivals into Melbourne last year. They've got to live somewhere. So as the supply of stock reduces, the demand is just increasing. So I think there is opportunity for investors to enter the market now and potentially get some decent returns if they buy the right properties.
Yeah. And which invariably, I mean, if you're talking about a rental increase and if you're talking about yields increase, well, then property starts to potentially become a more attractive proposition. And so all of a sudden you're seeing asset prices and capital growth start to come into the market where, maybe some of those apartment buyers haven't seen in the last 10 years.
Well, they might start seeing it now.
Yeah.
COVID was horrible for everyone, obviously. Landlords definitely felt it. They had tenants not paying. They had costs going up. They had the rents were slashed in some areas by half. Lots of challenges, and I think that it's come out of that back to the levels we were pre-COVID. And if it's not,
I guess if we think about what this looks like moving forward as well, too, in terms of just what we observed from a supply and demand perspective. So we talk a lot about immigration. I don't think that's going to change. I think that's going to continue on that trajectory. It's really easy for the government to import people, essentially, to help the economy continue to move along. We're seeing a lot in the media around building companies and builders fall over left, right, and centre.
Yeah.
In terms of what you're seeing, do you think that this issue that we're experiencing, where we're going to see upward pressure on rental prices, rental yields, is going to continue? From our perspective, I don't see it changing anytime.
I can't see it changing. I think that we've got a risk. It's kind of like this. It's a recipe for disaster. It's a perfect storm. You've got at the moment. So even in the rental market, there's division, right? Because a lot of not only landlords selling, the ones who've had enough. They've been sitting on their properties for 5-10 years and it hasn't achieved what they were promised. But you're also getting a lot of landlords looking at alternatives now, like short stay accommodation. So if you pull that out of the rental pool as well, developers aren't building. I mean, rents have to go up.
Yeah.
Unfortunately, as tough as it is now, I don't see them stabilizing. I don't see them going down. I only see rents increasing.
Yeah, just on that note, I always thought when I looked at the rental yield of, say, a house, 2.5%, let's just call it that. I always looked at it and just scratched my head and going, how can you have a place worth $1 million and the rent that you're receiving is $500 a week, right? It's just, I thought the numbers were always out of whack, and
well, maybe it's just a recalibration.
It could be a recalibration, and it's a bit more of a return on the risk and the investment that you've put in. But yeah, from our perspective, we don't see it going away anytime soon. But the people, so an investor, if they've decided to get out of the market, I mean, who's buying those? It's not necessarily people who were renting and now they're getting into the market. It might be other investors that are looking at it going, yep, the yield's getting more attractive. Yep. What are you finding from that perspective?
A combination. There's definitely some first buyers coming back in. But you're also seeing a lot of investors kind of going, okay, well, we can afford, we don't need a mortgage necessarily. We just want yield. We can afford to pay in cash.
Yep.
Done. They're parking their money there. They're getting a decent return on apartments. Houses, like you say, look, houses are more a capital gains play. Right? You're looking for those gains in the capital value of property. And the push in houses has probably been the value of land increasing. You know, if you've got a house in any suburb in Melbourne now and you've bought it 30, 40 years ago, most likely if you look at any direction from your house, you've seen apartments go up or you've seen dual occupancies, 2 townhouses pop up next door to you. And all of a sudden, this is more of a commercial play than someone wanting a house. You've got developers knocking on your door going, cool, I can turn this $1 million house into 2 $1.2 million townhouses, and as long as the numbers stack up for them, they're gonna pay what they're gonna pay for them.
Yeah. So what do you? I mean, we've spoken a little bit about income, we've spoken a little bit about yield, but what makes an attractive property? I mean, when you're selling a property, especially in this environment, what's attractive to someone who's purchasing a property when you're actually selling?
I mean, the old real estate adage, location is probably never been as important.
Yeah.
Especially now as people are coming back, work from the office. You know, the whole work from home thing, kind of COVID times, spun things out a little bit. There are a lot of people moving to regional Victoria, working from regional Victoria because they didn't have to go to the office in the CBD. And all of a sudden the office is gone, guys, everyone back in, and no one's commuting an hour and a half by train to go into the office every morning. So location is very important. Livability is also really important, right? I think the most important thing is ask yourself, is this somewhere where you or your kids or your family would want to live?
Yeah.
There's no secret sauce to this. Most people looking to rent or live somewhere probably have the same needs you do.
Yeah.
They want to be able to put in a dining table, perhaps, a lounge room. They want to have a kitchen that's functional, that's got cupboards, like a bedroom that fits your bed. All the basic things that you would want, as long as you use a bit of common sense with what you're looking at and you're buying, you'll find there is a market for it.
Yep. So maybe those properties pre-COVID that were completely run down and property prices were going absolutely berserk and people were just trying to buy anything, those are a little bit tougher to sell, tougher to,
There's a market for everything, right? At the right price, everyone's a buyer. So I think, you need to put yourself in the next buyer's shoes. If you're buying it at a discount now because it's next to a train line, the guy in 5-10 years is looking at it going, hold on, there's a train line.
Yeah.
All of those things come into play. The things that you're taking into consideration when you're buying is what the next person's going to see when they buy it. So
yeah. So location's always been a huge one. So let's just think along the lines of capital growth.
Yep.
So if you're potentially an investor looking for potential capital growth, land size is obviously a really, really big one as well too. What are some of the other things that would be thinking of or looking at? if we're looking at, maybe a decade-long strategy, looking at buying a house or a block of land or whatever it may be, what are some of the attributes that we should be looking for in that regard?
Yeah, I've been thinking of upcoming infrastructure projects. So is there a freeway coming up? Are there new schools coming in? Is there a hospital being built? Is there new roads or anything that's to support growth into that area to make that area more attractive? If an area doesn't change and it's just the same, that's what the next person's going to be looking at. But if there's a shopping centre being built nearby and a hospital going in, I mean, chances are there's going to be more people wanting to live in that area closer to those amenities.
It's common sense when you think about it, right? Like if you're living in that area, what are the things that you'd want to see that would attract you to that particular place? And in terms of attributes for the property itself, is there, future development opportunities, side-by-side townhouses?
Yeah.
Is it, you buy a 3-bedroom with the opportunity to renovate and put a 4th on there?
Definitely. If you can buy something a little bit run down and you've got the know-how to spruce it up a little bit better without overcapitalizing, because that's a trap that a lot of people have fallen into. They buy a house, okay, cool, we're going to do this and this and this, and before they know it, they've spent $250,000 to add a little sunroom with a pergola next to it that may not add the value that they're expecting it to add. Just the best way to predict what a property will sell for is to keep an eye on the local market, right? Realestate.com.au is an amazing tool.
Yeah.
You can search by what's sold in your area. So if you're planning a renovation or doing anything to increase the value of your property, have a look at what's sold recently at the price level that you want and go to that level.
Yeah.
That's the best way to predict what's going to happen and what your property's worth.
One of the other things that I know a lot of people consider when they're looking at property is school zones. Is there a mechanism to be, and I don't know, you might just say no to this, it might be a very short question, but is there a mechanism to be able to look at it and see what school zones fall into certain catchments? Because I've
Definitely
the only way that I've ever seen people do it is looking at individual schools, going on all of their websites. Does this house fit into it? But is there something that...
There is. There's a Victorian government have a tool where you can search by address and it tells you what school zone it's in.
Oh, perfect. Well, there you go.
Yeah.
That answers my question. So the answer is yes rather than...
The answer is yes. It's a really good tool as well for people looking to buy, right? If you want to be in a specific school zone, and there is a lot of value in being in the right school zone. A street away from it and a street in can have hundreds of thousands of dollars difference in property prices. So it's a great tool to use. And a lot of these catchment areas are actually growing a little bit as well as demand increases for school areas.
So you got to know someone in the know-how as to where the streets are. So you buy one street out, and in 10 years' time, it's
Well, it actually happened recently in Bentley. I think it's in Bentley, where McKinnon High, which has an amazing reputation, and schools within the McKinnon zone have always outperformed the neighbouring suburbs. And then they opened up a second campus, and all of a sudden, the property prices in that area increased significantly because they're now in the McKinnon school zone. So it can, if you know someone.
We do a lot of work for a lot of families in that area at McKinnon High.
Yeah.
Always on the radar. It's always something that people are keen to get into that area simply because of the reputation of the school. So we well and truly know all about that.
It's a great school. I was there for a couple of years. So before I went to Melbourne High, and then but the prices in the area just continued to skyrocket, increase as demand for the school. I mean, that's the only thing driving the prices in the area is the demand for people to go into the school.
I'm going to ask this more for entertainment purposes than anything, because I think our listeners and our viewers, everybody loves to hear this question and to hear if there's anything different. But going to auction, right? Is there any secret to other than offering the most amount of money? But in terms of auction strategies or anything like that, it's always good to throw that question out there just to see if anything different comes to it. But in your experience, have you seen a particular way, a particular method, a particular strategy that works? Yeah. Any thoughts on that?
I mean, what's the end goal, right? You want the house for the lowest price, right? In an auction environment, you're competing against the guy standing next to you. So there's two ways to look at it, right? You either, and what we see a lot of is either the really aggressive, like they're putting their hands up, they're bidding hard from the start, they're trying to intimidate the other person and trying to show that they'll just keep going and going and going, and hopefully turn you off putting in a few extra $10,000 bids.
Yep.
The other option is that person who sits there quietly until the very end, and when the auction is going once, going twice, and they put in that last bid.
Yeah.
I mean, at the end of the day, if you want the property, I think the best strategy is get in there, bid from the start. You've got nothing to lose. The worst thing that you can do is just sit quietly and do nothing, because the chances are that someone else is going to come in and outbid you. If you're just sitting quietly, someone is going to come in and outbid you.
Yeah.
Now, if there's not a lot of interest in the property, if you went through the first open for inspection, your second inspection, there was no one else there, you're in a pretty good seat to negotiate that.
Yeah.
But I think it comes down to getting in there, having a go, and just bidding with confidence.
Yeah, it's always an interesting one. You hear different stories, and
Well, I'm a little bit biased, right? I'm a real estate agent, so we want people bidding. But from what I've seen, the person who's out there aggressively bidding is often the person that buys.
yeah, so there is some method to the madness around the intimidation tactic, and I guess the person that they're bidding against is maybe thinking, geez, this person's got an unlimited budget, or is completely irrational in their thinking, and they're just going to keep going and keep going and keep going, and that's it, right?
Yeah, people know early on whether they're going to not fight, but battle it out.
Yeah,
or not, right? And at some stage, you'll turn around and go, okay, look, there's no point in me going that little bit above what I can afford if I think that person is just definitely going to get it.
Yeah. So there's nothing worse than when you go to an auction and it's going up by $1,000 bids, and it's taking a minute in between every single bid because everyone's taking their time and nothing's happening.
I mean, it's a fun show to watch. I love auctions. I mean, my earliest memories of real estate, and I think that's probably what got me interested in the industry, was seeing these auctions and these auctioneers who were just out there just like doing their thing, and people throwing their hands up. And back then, I mean, I'm sure half the bids they were calling were probably like the tree or the car, and there's a bird that drove past. But that's all changed now. So they're entertaining. Get out there and have a look at some. I think you'll find what the best strategy is for you, and everyone is comfortable at their own level and do what's comfortable for.
And do you find, I mean, one of the things that I've often heard, I don't know how much truth there is to it, unit, townhouse or villa unit, you always go the villa unit because it's on this much land versus a townhouse that's on this much land. Is there a difference in price when it comes to, what people are willing to go up to, or does it just purely depend on?
Depends on the property.
Yeah.
It depends on the property. I mean, so if you take into consideration a townhouse versus a unit, right?
Yep.
And I present to you a client who is older, they're downsizing from their house, they're probably going to want something on one level. If they're not looking to buy something for 3 to 5 years, they're probably looking for their next 15, 20 years plus, right?
Yep.
They don't want to climb upstairs and clean the rooms upstairs, and they're going to want something on a single level. And with the generation that we have now, an aging population, they're actually quite popular. Single level properties are actually coming back into popularity, and there's some great prices being cheap for them.
Yeah. No, I remember that. I saw a property around the corner from my place, single level, and there were 2 retirees battling it out at auction. A really nice location, and this thing just went crazy, and I couldn't work it out. And then I spoke to the agent afterwards, and that's basically what it was. It was just like, no, we don't want any stairs. We want everything it was a flat block.
Yeah.
It wasn't even sloping. It was just perfect. And that's exactly what it was. So,
and they'll pay a premium for that.
Yeah, I did. Absolutely. It was a good buy in hindsight.
Yeah.
But yeah.
Yeah. Yeah. I mean, the number of auctions that we've had where over the last 10 years where I've turned around afterwards going, wow, that person's paid a premium, or I hadn't, we didn't fathom that the price would get to where it got to.
Yeah.
And we look back now going, wow, that would have been great.
Yeah,
it would have been a great buy.
Be a lot of those properties around Melbourne where the capital growth has outstripped any premium that you.
But I mean, even if you consider like probably the first properties that your parents bought, right?
Whether they paid an extra 10,
I mean,
20.
If you asked them now, they would have gone, "Oh, I wish I bought the street."
Yeah.
At those prices. But at the time, they're probably looking at 15, 16% interest rates and stressing that they paid what they paid for them. Like, how are we going to meet these repayments? But look what's happened since then.
Yeah, and I don't think anybody ever turns around and says, I got the property maybe one time out of 10, maybe that. Yeah, I think everybody thinks that they've overpaid.
Oh, yeah.
I definitely have with the transactions that I've done.
Yeah.
In hindsight, different story and stuff. But so I don't know. Maybe it's just the psyche that we've got. Maybe it's just the thinking. But it's one of those things.
Well, we've always paid more than the other bit out. So, but you saw value in whatever you bought. So, realistically, it had more value to you than the other. Or you're in a position that you could pay a little bit more than the other. So, I think that, in terms of buying property, you've always got to make sure that it meets your criteria, make sure that it suits, if it's an investment, suits your financial goals. That's probably conversations that you guys have with clients a lot. And then if it's something you're going to live in, that's a totally different conversation and consideration than if you're buying out as an investment.
Yeah, absolutely. Marcel, I think that wraps it up quite nicely. So thank you very much.
My pleasure, guys.
Thank you today. Really appreciate you coming in, sharing your knowledge and wisdom with us and everyone listening and watching. So appreciate it. Thank you very much.
Lovely. Thank you so much.
Yeah, thank you, Marcel. To our listeners and our viewers, if anything that you saw or heard today is of interest, we're going to have Marcel's details in the show notes as well, so you can reach out directly to him and his team if you want any more information or if you're interested in having a chat further. Once again, thanks for your time. Like and subscribe, and we'll catch you on the next one. Thanks for listening today. If you have any questions on what we talked about or would like to have a chat about your money journey, visit us at 360fs.com.au.
Just a reminder to our listeners that the information contained in this podcast is general in nature and is not intended as personal recommendations for the audience. Please consider whether the information suits your circumstances before acting on it. This information is provided by Billy Amaritis and Andrew Nicolou of 360 Financial Strategists Proprietary Limited, authorised representatives and credit representatives of AMP Financial Planning.